Welcome to the Cashflow Ninja, the podcast sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja. Hello, Cashflow Ninjas. MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today. In today's show, we're going to look at the power of the Deferred Sales Trust. My guest in this episode is Brett Swarts. Brett is the founder of Capital Gains Tax Solutions. Each year, he equips hundreds of business professionals with a Deferred Sales Trust tool to help their high net worth clients solve capital gains tax deferral limitations. His experience includes numerous deferred sales trusts, Delaware Statutory Trusts, 1031 exchanges, and $85 million in closed commercial real estate brokerage transactions. He is an active commercial real estate broker and investor with brokerage experience and ownership in multifamily, senior housing, retail, medical office, and mixed-use properties. Brett was formerly an associate at one of the largest commercial real estate brokerages in the country. He has his own multifamily brokerage company right now, and he has years of hands-on training from some of the best in the business. I have launched another podcast, by the way, Cashflow Investing Secrets. It's a shorter show, 10 minutes or less, where I share one concept and or idea at a time that I've learned from interviewing over 500 cashflow ninjas and studying millionaires and billionaires for over 2 decades. You can find Cashflow Investing Secrets on all of the podcast platforms, all of the video platforms, and also all of the live streaming platforms. Simply go to your preferred one, type in Cashflow Investing Secrets, and you'll find the new show. Savvy investors know that in order for the miracle of compounding interest to work, its magic, you have to be constantly invested in all stages of the economic cycle. So the question then becomes, how do you find solid investments when the stock market is close to all-time highs and everything else just seems so inflated? That's where our friends at ASIM Capital come in. Since 2011, ASIM has helped more than 300 accredited investors allocate more than $25 million to mobile home parks, self-storage, and workforce housing due to their ability to perform well during economic recessions. If you're interested in learning more, head on over to asimcapital.com. That's ASYM capital.com to get instant access to their investment offerings. MC Laubscher here, the creator of the Cashflow Ninja and Cashflow Coach at Producers Wealth, where we help our clients integrate infinite banking with their business and investments. To learn how you can create your own banking system to turbocharge your investments and business in 30 days or less, go to yourownbankingsystem.com. That's yourownbankingsystem.com. Brett, welcome to the show.
MC, thank you for having me.
Yeah, super excited to learn a lot from you. There's some powerful info that you've been sharing that I come across and like, I don't really know anything about it. So this would be great for my listeners. And you've put out some great content on this. So before we jump into that, let's put the horse before the cart or the cart before the horse or whatever that is. I'm known for butchering quotes. Why don't you share a little bit about yourself and your journey with my listeners?
Sure. Thank you so much. Yeah. So I live in California. I'm a native here, originally from Mission, San Jose, Fremont area, kind of near Silicon Valley, but mainly grew up kind of in Sacramento. I spent half and half my time back and forth. And part of my time in the Bay Area was helping my dad build custom homes. We call it the MC Hammer days, when everyone wore the 80 pants. I was an 80s kid. And MC Hammer had this big house, and no pun intended, MC. But he had this big house on top of the hill, right? And we built the houses kind of like the smaller ones around the side there. So still really nice houses. But I learned the sticks and bricks of real estate. I learned how to work hard. I learned what it means to be a business owner and an entrepreneur, and to start to own and buy and sell real estate. My mom had a real estate license. My brother did too. So did my older cousin, who became a mentor of mine. So fast forward to college, I took an internship at Marcus & Millichap, which is a real estate investment brokerage firm. And I studied how to help people buy and sell apartment complexes. And that was in about 2006. I was still in college doing that internship. Just graduated in 2007. just kind of got things going, and everything kind of hit the fan in the '08 crash. And so it was really, honestly, though, the best thing that I think could have happened, because I got to learn through the fire of what it meant to help people think beyond just the typical way of buying and selling real estate, right? And think outside the box for ways to prevent, what a lot of them went through, which some of them lost everything, which introduced me to the Deferred Sales Trust. Our manager had a speaker come in and discuss this strategy. And so it's been about a 10, 11-year journey now of studying this strategy and working with that. Personally, back to the personal story, I love hoops and sports. I grew up playing football, basketball. I was fortunate enough to play on scholarship in college and basketball. And then also I have a family now. My wife and I, we have 5 kids between the ages of 1 and 9 years old. And we stay very busy as parents, and then also as an entrepreneur and educator. We have a busy lifestyle. So.
Awesome. Now, Deferred Sales Trust, you mentioned that's a strategy for listeners, and we have listeners that range from folks that are just starting their journey all the way to sophisticated investors. What is a Deferred Sales Trust, and how does it work, and how would you use it?
Yeah, so a deferred sales trust is just a manufactured installment sale or a specialized installment sale. Your listeners may know it as a seller carryback. That's actually the law that it's tied to. It's IRC 453, which goes back to the 1920s. We just use the law in a seller carryback in a particular way, where we're introducing this trust, this third-party trust, to buy your position, MC, and immediately sell it to the buyer who was lined up. So you get a number of unique advantages versus just a traditional seller carryback.
What are some of the advantages that you would get?
Yeah, let's start with the why and the big problem. So according to the American Bankers Association, there's about $17 trillion that will pass from one generation to the next in the next 20 years. And this is known as the largest wealth transfer in the history of the world. And it's by the second largest population generation called the baby boomers. And in fact, there's about 77 million in the US alone, and about 10,000 of those are turning 65 every single day. Okay? You couple that with 50% of America's net worth is tied to high-end primary homes, private equity, which would be like businesses, and then commercial real estate. That's 50% of the total net worth. So you have the biggest generation with 50% of the total net worth on these highly appreciated assets. We call this the perfect storm. The other part of the perfect storm has to do with interest rates are hovering near 40-year lows, and real estate has appreciated a great deal over the number of years. And so these sellers are faced with, how do I transfer all of this wealth and this illiquid asset to the next generation without getting hammered by 30 to 50% of their gain being wiped out by capital gains tax and depreciation recapture? So that's the big, audacious problem they're facing. And a lot of them feel absolutely trapped. They feel frustrated. They've owned for 30, 40, 50 years. They've built a business. They have employees. They've gone through the ups and downs. Oh, by the way, they're 11 years past the '08 crash, and all of their values are back again, but they're also 11 years older, and they're even more ready to retire than they were then. And so what are they to do, right? And so a lot of them just don't sell. They just say, forget it, I'm not going to sell, because it just doesn't make any sense to give it all that away to the government, who's just going to, probably spend it unwisely. The second thing, though, is they can do a 1031 exchange if it's an investment property. So an investment property, for a 1031 exchange for your listeners, it's just you buy an investment property and then you sell that, and then you trade it into another property equal or greater value within 180 days. As long as you do that, you defer the capital gains tax. So I help people do 1031 exchanges. Again, I'm a multifamily broker here in Sacramento, and I still help people do that. But there's limitations to that, right? It doesn't work for a business. It doesn't work for a primary home. Okay, it also doesn't work for collectibles or artwork. Whereas the Deferred Sales Trust works for all asset types, okay? Second, the 1031 exchange is very, very restrictive, meaning you have to close within certain rules. You have to identify within 45 days. You have to close within 180 days. And we call this the sell high, buy higher 180 days later, which is not what our parents, MC, taught us to do. Our parents taught us to buy low, sell high, and then buy low again, right? But unfortunately, with the 1031 exchange, you have to close within that time period. And that's exactly what happened in '06, 05, 07 before the crash. People could not refuse the high offer they were getting. And they said, yes. And then all of a sudden they said, oh no, now I'm on the buy side. Now I've got to go find something. And oh no, I'm running out of time. And sellers knew that too. Sellers say, I love a 1031 buyer, right? Because I know they're being pressured and forced to overpay. And they didn't have much negotiation room. You couple that with the next thing, which is typically they're going to replace the debt or bring in more debt, okay? So that's really where people got hit. They took on what I call dumb debt. Okay, dumb debt is when you overpay for a property just because you wanted to defer the tax, and you take on more and more debt. Perhaps it's recourse debt. Perhaps it's cross-collateralized with multiple properties. And then when everything fell apart, they lost a lot and maybe all of it, right? Instead, the Deferred Sales Trust is the solution to that, because at close of escrow, all of the debt is paid off and all of the proceeds go into the trust. So we call it the debt-free plan. It's kind of like the Dave Ramsey debt-free plan for your commercial real estate or business or high-end primary home. And the funds are sitting in the trust, all tax deferred, and you're out of debt. And then it leads to the next thing, which is optimal timing, okay? So the 1031 exchange, by default, it's really not optimal timing unless you can find a deal. But by the way, we can save a failed 1031 exchange. So we want to encourage you, hey, go for your 1031, look for it. But if you don't, but have a backup plan just in case. But back to the optimal timing piece, the Deferred Sales Trust is really unique in that since it's not a 1031 exchange, the rules are different. You don't have to follow the 45 days to identify. You don't have to follow the 180. You can actually buy when you want to. Okay, that could be 5 years from now. That could be day 181. Whenever you find a deal, MC, you can buy that. And so that by itself is honestly the reason I started this business and started to educate on the Deferred Sales Trust, because everyone else was stuck in the 1031 trap, and now they don't have to be anymore.
Right. And that's from an exit. And that's why I'm so glad that you're on the show and we're covering this, because we talk a lot about acquisitions and management and enhancing the value. But the exit strategy, when you're selling properties, I mean, like you said, you're dealing with capital gains taxes. If there's a 1031, hey, I made a boatload of money on this property, but guess what? Now I'm a buyer and all the prices are up there. Let's talk a little bit about the mechanics, if you will. So how would this work? I've got a building. I'm ready to sell the building. I don't have another property lined up for a 1031 exchange yet. How would we go about setting something like this?
Yeah, let's do an example. Okay, we just helped a gentleman, and he just sold about a $1.8 million multifamily property here in Sacramento. He's close to 70 years old. He lives in Marin, California, and he's driving to South Sacramento every other day, managing, collecting rents, banging on doors. And it's not necessarily a nice neighborhood; it's a tougher neighborhood. And he's a real estate broker by trade. He's done multiple 1031s over the years, but he's just tired. He's just tired, and he's going, I want to get out of this. So how do we do it? Well, he looked at, by the way, the 1031. He looked at the Delaware Statutory Trust, which some people get confused with the Deferred Sales Trust. But then he ultimately decided 100% on the Deferred Sales Trust. And so what we did is essentially just set up this trust before close of escrow. And we have the buyer agree that they'll cooperate with the seller. And a simple statement in the counter agreement, which says that seller has the right to a Deferred Sales Trust at no additional cost to the buyer. So that sentence right there before contingencies are removed is very important. That we establish a placeholder and an intent to defer taxes. Okay, it's the same thing you would do if you were doing a 1031. So we established that language. He engaged us, and by us I mean the tax attorney who created the structure. Honestly, MC, I'm just the nurse, right? So I'm going to take your pulse, and I'm going to say, hey, sounds like you might have something. It sounds like you might want to get tax surgery with this deferral strategy. Before you do, talk with the brain surgeon over here, who's actually the CPA tax attorney, and bring yours in too to get the blessing. So fast forward, they sign an engagement agreement, and it's a conditional engagement agreement. It doesn't cost anything if you don't do the trust, but it's in place. And so it was in place. So at close of escrow sends the funds basically to a bank account that's opened up into the trust name. Okay, so it's not constructively received or actually received by this gentleman's name was Peter. It wasn't received by Peter. It's kind of like a 1031 in that if you were to do a 1031, you send it to a qualified intermediary, right? So the key is to keep the funds outside of the principal's hands. So they're sent to that trust, to that bank account for that trust, and then it's invested in stocks, bonds, and mutual funds. And before it's invested there, before the deal closes, the client also fills out a risk tolerance questionnaire, basically establishing what the risk might be and what he might want to see the investments on. So that's it. The deal closes. He's really happy. All of his debt's paid off. He put 1.3 in there. And now the best part is he's waiting for the market to shift. He's waiting for the optimal time to put in up to 80% of the funds can be partnered by partnering with the trust, can buy commercial real estate, or can be, but better yet, he doesn't necessarily want to do it himself. He wants to put it into multiple syndications. So he's looking at Kevin Bupp's mobile home park fund. He's looking at a multifamily a deal here in Sacramento for a local syndication group. He's looking at a number of different groups to just put small amounts in, right? This is another unique part about this versus the 1031. Generally, the 1031, you're trading one property in one location and one product type for one other property in one location, one product type, one city, right? So you're not diversified like you could be in stocks, bonds, mutual funds. I'm not a huge fan of those, but you can direct it to commercial real estate. You can direct it into mobile home parks. You can direct it into the northeast where you're located. You can do it in the Midwest. You do a portion of that. So at any time, right, when the deal makes sense. So this is why it's so exciting for anyone who can hear about this, so they can get diversified and they can create and preserve more wealth.
The investments. So you mentioned he's putting it inside that trust. It's then placed in stocks, bonds, and mutual funds. What are you allowed to? Can he put it into something else there before the trust place investments and other offerings?
Yeah. So better way to answer this would be, what can't you put it in? Okay.
Yeah, that's the better question.
Let's just include what you can't put in. So you can't put it into your primary home, right?
Okay.
So he couldn't put into the trust and then go buy a home, and it's an investment home, but then he moves into it, right? So you can't do that because that's considered constructive receipt. Okay. Mm-hmm. So that's no go. You can't do primary home. You also can't go outside of the U.S. So if you want to go build a hotel in Brazil, is too much risk, and it's too much risk on the trust. We're going to say no. So to clarify too, why? Okay, so as a trustee, my role is to make sure that the seller is paid back, who becomes the note holder, is paid back the due amount. And we have over 23-year track record of not one single issue of failing to pay back any of the note holders. Okay, we have thousands of financial advisors, and we've been through over 14 IRS audits. And so we're very particular on how we educate and the rules that we follow, okay? Because we want to maintain the integrity of the trust. And so with that, we say nothing overseas, that's too much risk, and no primary homes, because that's just against the law. They're going to get, the tax is going to be triggered. But you can go into stocks, bonds, mutual funds. You can fund insurance policies. You can go into ETFs. You can go into fixed instruments. You can put in a money market account. But again, the best is the commercial real estate, because that's where I'm biased, right? Find a multifamily deal that's value add, that makes sense, right? Where you can partner with the trust. And oh, by the way, you get a brand new depreciation schedule. So this is also good to mention right now. So in a 1031, the depreciation schedule travels. What does that mean? Well, if MC owns a property for 27 and a half years, let's say it's an apartment complex that he bought for $10 million, it's going to go down to zero if he's done straight line depreciation. If he does accelerate, it's going to be sooner than that. But that means if he trades that property for a $20 million deal, he's only going to get a new $10 million. He's not going to have the original 10 because that's already gone. And the Deferred Sales Trust, we say, no, MC, don't do that. Sell the $10 million deal, move it into the Deferred Sales Trust, go buy that exact same $20 million deal by partnering with your trust and get a full $20 million depreciation. Okay, that in itself can really change the way everyone approaches highly appreciated commercial real estate. And so that's the message we're trying to get out. I'll give you an example of this. A gentleman sold in 2006 in Minnesota. He's a very ultra high net worth individual. And he sold basically at the peak. He kind of saw it coming. He put the funds into the trust. Okay. And 5 years later, that same property was foreclosed on by the bank. He bought it back from the bank. Okay. Through the trust, all tax deferred, and he got a brand new depreciation schedule. And he also, by the way, bought it 60 cents on the dollar, right? We call it the Monday morning quarterback, right? You drop back and you played it perfectly, right? Well, he did. He played it perfectly and it worked out, but this is what it can do. So if you're in a highly appreciated marketplace and you think it's a great time to sell, consider the Deferred Sales Trust.
Let's talk about the trustee of that. How does that work? Who's allowed to be the trustee? Because that's the person controlling it.
Yes. So that's my role. So I'm a third-party unrelated trustee. So I'm an exclusive trustee for the Deferred Sales Trust. Okay. So the bigger group that oversees this is called the estate planning team. Okay. So I'm a member of the estate planning team. Who's the estate planning team? Well, it's a mix of thousands of business professionals, CPAs, tax attorneys, national law firms, insurance professionals, financial advisors, okay, commercial real estate brokers, business brokers, you name it. Anyone who deals with high net worth individuals, we have them across the U.S., right? And we've closed thousands of these trusts through these, through all of the members within the estate planning team. Now, the estate planning team assigns exclusive trustees. So I'm one of the exclusive trustees. There's only a handful of us across the U.S. And so we play a third-party role. Like I can't be, if it's your trust, MC, I can't be related to you. I can't be your cousin. I can't be your son. I can't be your brother, right? I have to be unrelated. And I also have to be in it for business purpose. But the most important question you want to know is, can this person named Brett, who I've never met, and I'm going to, millions of dollars are going to go into this trust, how do I know that my funds are protected, right? How do I know he's not going to take it to Mexico and live off the 10 million? Well, the answer is, first of all, you have 24/7 access to view the funds, and the funds only ever move with your signature, okay? As a trustee, I have no way to move the funds. They don't go into my personal bank account. In fact, they go to a large bank, and we have what's called DACA account protection, which stands for Direct Access Control Agreement, which is kind of like an escrow for your funds. So, and without MC's signature or whoever the note holder signature, the funds don't move. Another way to put it too would be, let's say you're selling that $10 million deal and you paid $4 million in tax. You walk in with $6 million and you hand it to your financial advisor. Do the funds move without your signature? The answer is no, they don't. Now, instead, you say walk in with the $10 million and say it's through my trust. Do the funds move without your signature? No. So you have the exact same protections. The trust doesn't add any level of risk.
You're listening to the Cashflow Ninja, the show helping people all over the world create monthly cash flow and achieve freedom today, not in 10, 20, 30, and or 40 years. This is the show where cash is not king, but cash flow is king. We will be right back after a word from our sponsors. Kings, queens, and royal families, along with the nobility and ultra-rich, have warehoused and stored their wealth for centuries in gold and silver, art, land, and real estate. These assets have stood the test of time through centuries and have been a great place to preserve and protect their wealth. Like gold, silver, land, and real estate, art has been around for centuries and will be around for many, many more centuries. That's why the ultra-rich will continue to invest in art and preserve their wealth in art. While the S&P declined 5.1% in 2018, the art market returned 10.6% and was called the best investment of 2018 by the Wall Street Journal. Masterworks is the first company to allow investors to buy shares of great blue chip art masterpieces by artists like Picasso, Monet, and Warhol. You can get set up on their platform at cashflowninja.com/art. My friend Dave Zook from The Real Asset Investor says you can be conventional or you can be wealthy. Pick one. The Real Asset Investor team creates value for investors looking for higher yield returns from ATM machines and self-storage investments. Their syndications offer attractive investment opportunities that produce strong cash flow, equity growth, huge tax incentives. They are truly passive and managed by a world-class team. To learn more about the exciting investment opportunities the Real Asset Investor offers, such as their ATM and self-storage syndications, please visit cashflowninja.com/Real Asset Investor. You're listening to the Cashflow Ninja, the show helping people all over the world create monthly cash flow and achieve freedom today, not in 10, 20, 30, and or 40 years. This is the show where cash is not king, but cash flow is king. Now let's return to our interview. There's a lot of moving pieces here. So what would you recommend if folks are starting to learn about it? What are some resources that they can look at, or what are some of the steps that they should take if they're interested in something like this? Yeah,
the biggest thing will be, it seems like it's too good to be true. It seems like my CPA would have told me. It seems like my real estate broker would have told me, right? And by the way, when I learned about it 10 years ago at Marcus and Millichap, we were looking around going, why don't we know about this, right?
Yeah.
How is my CPA not know about this? And part of that is, well, there's really, all roads lead back to the law firm who created it. And it's a proprietary structure. And once people sign an NDA and review it and get the blessing from their CPAs, tax attorneys, most of them say yes. Okay. And at the end of the day, if they say no problem. They don't pay anything. But I would encourage them to come to my website, go to YouTube, schedule a one-on-one call with me. We have a Deferred Sales Trust calculator. If you go to my website, you can do a side-by-side comparison of answer 12 questions, and it'll give that. And just start to get to know us, okay? And then bring in your trusted advisors. And another analogy would be, MC, if you're going to go get surgery on your brain, right, or on your knee, you're probably not going to understand everything that the surgeon's saying. But you're going to look at their track record, and you're going to look at their expertise, and then you're going to make a judgment to, should I, given the risk, should I have surgery? And what I can tell you is it's 100% legal. We're batting 1,000, meaning we've survived 14 no-change IRS audits, of which the biggest one was a $125 million deal in San Diego. Okay. Also, 2 formal reviews where they just reviewed everything because so many deals were going. And then also FINRA has actually scrutinized it as well. So there's a lot of people who have had their eyes and ears on this, and it's not something where we think you're going to have any concern with once you get to know us, once you bring in your trusted advisors to walk through it. And then more than that, we put you in touch with the clients who have closed the car dealerships, right? An $80 million deal in California for a car dealership that we deferred $20 million tax. The dentists, the veterinarians, right? The business owner, honestly, I think is the number one target here. Or the high-end primary homeowner out of Newport Beach. We helped them defer $6 million in capital gains tax on their primary home. They lived there for 2 of the last 5 years. They didn't qualify for a 1031, right? Because it was the primary home. They had the 121 exclusion where they had the $500,000 to offset. But above and beyond that, they owed $6 million. So wow, what an amazing way to keep it into their family so they can give more, they can retire or do whatever they want with rather than paying the government. It's gone forever. So we'll put you in touch with those folks. But even better than this, MC, if you have your own financial advisor, bring him in. He can manage the funds, okay? We'll want to get him signed up and work out the fee agreement behind there, right? But whatever you need, we can provide, and just make sure you get to us early rather than the last minute, right? Because if it's the last minute and contingencies have been removed on a business or a real estate, a residential deal, it's too late. If it's commercial, we can save a failed 1031. But on that point, you need to work with a qualified intermediary who gives you both options, okay? Because if you go with some that don't know about it, they just can say no. And you're like, well, I'm going to pay $2 million in tax. And they go, well, that's between you and the tax man. Instead, work with a QI company who's going to give you both options. Yeah. So we have those QI companies right now ready to go, right? So hopefully that answers your question there.
No, absolutely. Now, one habit I've observed from wealthy and successful people is that they're always studying new things and learning new things. And there's a whole ton of stuff going on in the niche that you're in. What are you currently studying and what are you currently learning? Yeah,
so I'm always trying to study and sharpen the blade of leadership, communication, and so the biggest one right now that I've kind of rediscovered is the book called Crucial Conversations. And it's the idea that, we come into some, whether we are prepared for it or not, or ready for it or not, emotionally high-charged conversations with business partners or family members. And if we're not prepared for that, or at least thinking of some strategies to make it go well, make it go as smooth as possible, open up what we call making it safe, right? Making it safe for people to dialogue. Yeah. Then it can really cost us, right? So the story is my brother and I, we were like best friends. He's my best man. He's 2 years older than me. He's always my big brother. We didn't have a fight since high school. And so I'm 36 now. So we got in an argument, and it was an emotionally charged environment. It kind of caught me off guard, caught him off guard. And I said some things that, had I been prepared and read that book before, I had read it 10 years ago, that I wish it would have been a lot better. I had a lot less stress. So I ended up reading it again after that. And we made up and everything's fine. We apologized and forgave each other. But the point is, look at things like that, especially have to do with relationships, right? How you're intercommunicating with your family, your partners. And the other one I'll mention is never split the difference, okay? This is Chris Voss. And I feel like I can't get enough of Chris Voss. I mean, I saw him at the Global Leadership Conference. I mean, I read his book. I get his Black Swan mailer. I try to find him on every single podcast he's been on. I feel like I learn something new every single time. And this idea of mirroring what someone just said, the last three words of what they just said, and how that opens up dialogue and how that connects you to the other person. I've got to learn how to listen better, right? Because I tend to have a driver personality and have a lot to say, right? So by mirroring, it helps to create a space of dialogue, right? So that's been so big for me. So those are the two I would throw out.
Awesome. Yeah. And Chris was awesome. A previous guest on the show as well. So he
tell him to say hi if you get him. Tell him I want to be on his show.
Absolutely. Now, our core message in our show is to leave our families, communities, and the world better than we found it by passing down a mindset, values, and principles to future generations, not just money. So if you cannot pass on any money to future generations, and we're only allowed to pass on 3 principles to them to build wealth and achieve happiness and success, what would they be?
What are the 3 principles to help build wealth and just make life better for everybody? So I wrote these down. So the first one is learn to work harder on yourself than you do on your job, MC. This is by Jim Rohn. Okay, he's one of my leadership mentors from virtual, right, from books. And then you do on your job. And this is the idea. It's not just to make more money, right? Because if you work hard on your job, you'll make a living. But if you work harder on yourself, you'll make a fortune. And the idea is your health, your relationship with God, your relationship with your families and friends, your career, right? Your personal development and leadership, right? If you can work on those major areas of your life, you become more valuable and your character grows and the other stuff just follows, right? Those are just byproducts. Rather than just focus on getting the high grades or just getting that license or just closing that deal or just becoming a better salesperson, right? More so work on all the other things here and those other things will come so you'll be more valuable. So the second one would be hire and partner with ideal team players, okay? This is Patrick Lencioni, another global leadership person. It's amazing, okay? And he talks about 3 characteristics, humble, hungry, and smart, okay? And when you're looking for partners or you're looking for employees or team members, you want those 3 categories as best as you can. And what's humble? Humble is pretty straightforward, right? They're willing to be coachable. They're willing to learn. They're willing to accept their role. Hungry means exactly what it is. You're going to work extremely hard, right? And you want it. You want it, right? And you have an internal motivation. You're internally driven. And I like the honey badger as a good analogy for that one. The last one is smart, and it's just not IQ. It's actually EQ, right? So emotional intelligence. How do you connect with somebody? How are you listening to people? How do you know what personality type? How might be a better way to approach an analytical versus an expressive versus a amiable versus a driver, right? Having the emotional intelligence to connect with people. Okay, so that's number 2. Number 3 is, this is a personal one, and this is a spiritual one, but it's love the Lord your God with all your heart, all your soul, all your mind, and all your strength. Okay, so I'm a Christian, and so if you're a Christian, the best thing I could say is exactly that. Love your Lord your God with all your heart, soul, mind, and strength. Okay, and then unleash compassion, right? Go and give. And what does that mean? I mean, that means not only just giving to charity and giving to causes that you believe in, but actually support either with your gifts and your talents and your time. One of the ones we're most passionate about is what's called Agape International. And they're in Cambodia, and they help free people who are in child sex slavery. And so they have these SWAT teams. So what's amazing is my church, Bayside Church that I attend, they hired a SWAT team to go in and actually bust up these really, really dark places and then bring these girls out and save them and educate them and house them and just, so find a cause that you're passionate about and unleash everything that God's given you to help more people out. Because at the end of the day, that's all that's really going to matter is how much people we helped and what kind of legacy we led to inspire more people to do that.
Absolutely. And I appreciate you sharing that. Brett, where can my listeners learn more about you? Where can they follow you and where can they stay informed of all the projects that you're involved in?
Yes, thanks for asking. So capitalgainstaxsolutions.com is the website, but you can find me on YouTube. You can find me on LinkedIn, on Bigger Pockets. I'm actually launching a podcast here in 60 days. And so it's going to be called Deferring Capital Gains Tax. And so I'd love the opportunity to connect with you. We do one-on-one consultations all the time, no cost. Get to know us, reach out to my team and myself.
Awesome. Awesome. Well, thank you so much for coming on the show and sharing your journey and your knowledge and providing so much value for us regarding this very, very unique strategy. Appreciate you coming on.
Thank you, MC, for having me. My pleasure.
Life settlement investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic, market, and geopolitical risk. It's been part of the billion-dollar blueprint followed by institutional investors. And if you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing life settlement investments, Penumbra Solutions, at cashflowninja.com/life settlements. Thank you again for joining me on the Cashflow Ninja. If you like what you hear and appreciate what we're trying to build here, please subscribe, rate, and write a review for our show on iTunes and share our show with family, friends, and your network. If you're not a subscriber to our newsletter, you can sign up for our newsletter at cashflowninja.com. I want to thank you for spending your most precious resource with me today, your time. Until next time, my friend, live a life of passion and purpose on your terms. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.